Well, good afternoon, good morning if you're coming in from the United States. We're going to wait a couple of minutes for the attendees to spool in. We're anticipating around about 200 people taking part, so we'll just pause a second before we start, but we'll be starting within the next 20 seconds, I imagine. Okay, well, look, good afternoon, good morning. My name is Tom Jenkins. I work at ETOA, and I'm absolutely delighted to be hosting this webinar on VAT, particularly the tour operators margin scheme, and particularly the application of the tour operators margin scheme in Germany. We are delighted to be joined not just by David Bennett, who's very much the doyen of Toms in Europe, but also by Volker Jotzig, who is our German expert, and we also have, I'm delighted to say, Mario Versic, who's from Croatia, who will be telling us what's happening in Croatia. I think we have some news, or we have potential news, so I would encourage those of you with business in Germany to pay attention, because it's quite important. But to start off with, I think, David, it would be great if you could give us a quick introduction as to what the current state of play is technically governing operators selling German product throughout the world. Over to you, David.
Okay, thank you, Tom. Good afternoon, everybody. Yes, I will just say a few words, then hand over to Volker, really just to introduce the subject of VAT in Germany. I think the first point to make is that what we're really talking about here is the extent to which, if any, the tour operators margin scheme should be considered to be applicable to tour operators and other travel suppliers established outside of the EU. This has always been a moot point. It's never really been resolved, but it has become more of an issue over the last few years, due no doubt at all to Brexit. Very, very soon after Brexit, after the end of the transitional period, Germany announced that with immediate effect, tour operators and similar established outside of the EU, but selling holidays and other form of travel within Germany were not covered by TOMS, and therefore should account for VAT, German VAT, on travel within that country. It was never actually adopted in practice. It was postponed. It was then postponed again. Most recently, at the end of last year, the proposed introduction of the rule on the 1st of January 2023 was postponed again until January 2024. We'll hear from Volker in a moment, but officially, at least, I believe that that is still the stated position of the German authorities. There was very, very little detail available as to how the German rules would work in practice if Germany had gone ahead with its planned requirement that non-EU tour operators should pay German VAT. But I think it was fairly clear that on one basis or another, VAT at the appropriate German rates would have been payable on all forms of travel, whether B2C, B2B or wholesale, to the extent that they were considered to take place within Germany. There was, of course, an awful lot of opposition to what was being planned, both from associations, prominently from ETOA, of course, and also from German-based representatives of certain sectors of the German travel business, who realised that what the German Finanzamt was planning here was in fact not in their best interest. So I think without further ado, I'll hand over to Volker for an update on the position as we understand it right now in Germany.
Indeed, over to Volker. Volker, over to you.
Yeah, thanks a lot. So hello to our guests here at this ETOA webinar. The brief update from Germany starts with a very important news. It was beginning of this week, end of last week, that there were rumors that Germany is about to postpone the application of what we call here in Germany non-EU based TOs ex TOMs. Once again, basically this has been expected, but as you've seen in the last years, the Federal Finance Ministry came up with its decision quite late in the year, so nobody knew in advance. And well, these rumors that we heard have now, well, they become clearer and clearer. So I assume that we will hear by mid of this year that Germany is about to postpone this regulation for another 3 years now, so until the end of 2026, sets everything on hold, which means that TOMs will still be applicable to anybody in the world who's selling third-party travel in Germany, so nothing changes. This is presumably very good news for all those that operate from abroad, from non-EU destinations and selling German travel, which means nobody will be obliged to register. Everything works in the same way as it worked before, so no input VAT recovery and the margins to be taxed where the tour operators are established, meaning that those that are not established within the EU don't pay margin VAT, and those within the EU still do. This is an issue, this is unsolved. However, that is the situation, and I think overall it's quite good news, especially to those joining us today here in this ETOA seminar. I would, if Tom let me talk about this, I would focus on one point which may become the future position when we see how travel shall be organized and taxed, well, maybe in 5 or 10 years when we have the new regulations on EU level. Tom, TTLnet, ECTA and other associations have put together a position paper on this and provided the EU Commission in late January with our points, especially on the question of how to tax margins or travel supplies in a more or less fair way. I know when I say taxation and fair in one sentence, Tom always starts to smile and laugh. However, there is something that we've already also shared here within Germany with the tax administration in Berlin, and they understand our point, and they say, look, we understand that if we tax non-EU based tour operators under the normal VAT rules, when travel is sold in Germany, then we do some kind of overtaxation due to the fact that although tour operators would be entitled to recover input VAT, basically the invoices used in the travel industry don't show proper VAT, and therefore we would come to an overtaxation. Therefore, it will be an issue that we come to some kind of margin taxation, but based on what we call the double EU approach, meaning, and that is our understanding of the future of travel VAT, all travel within the EU, which is sold to EU customers, that should be subject to VAT in the future. And I guess there is more or less common sense on this. We're lobbying for this. I guess this is a fair way forward to this, because if so, we will only have some kind of TOMs on those travel where non-EU based operators compete with local EU tour operators. And I guess this is, and then this idea of fair taxation within TOMs makes sense. This is where we should go for, and this is even an idea that has been set in Berlin. Taking all this and even the fact that there are some court cases pending, we talked about this in last year's October, November, here before a lower fiscal court. I guess the Federal Finance Ministry has also, they have to accept that the wording of the German VAT law does not allow for an exclusion of non-EU based tour operators from TOMS. So all in all, that's what we are here in Germany.
I think what you do is quite rightly pushing the conversation onto what's happening in the future. But I think just to make it absolutely clear to people, particularly those who've been listening to us discuss this really since 2000, which is when we naturally had to start to discuss this, just to stress that it looks as though the German finance minister will make a public announcement later in June at some stage to say that they will formally suspend application of this law for at least 3 years.
Yeah.
We assume, pending the outcome of the European Commission's deliberations on reform of the tour operators margin scheme. And what that means is that those operators who had been looking at the possibility of having to register for VAT wherever they are in the world, they'd have to have registered for VAT in Germany and do input and output calculations. And anybody who'd been using an EU-based wholesaler similarly would have to do input and output calculations on their German product. But if they'd used a wholesaler, they wouldn't be able to do very much in the way of input refunds. They would have had a double taxation exposure, as you alluded to. So at the moment, this is now suspended, or we think it's going to be suspended, and it's going to be suspended for at least 3 years. And that's, I think, crucial news for the inbound industry going into Germany. And indeed, anybody who includes Germany as part of their pan-European product. Volker, you have your hand up.
Yeah, just so it is still a rumor. We have not seen any document. We have heard about a draft that has been now discussed, tax administration internally, and the source is not only one source. You hear it, well, at least I hear it from different sources say, look, this makes sense. We hope that all this will pass the relevant internal meetings mid-end of June, so that we may have certainty in written form end of June or beginning of July, whatever. At least it is the right decision at the right point.
Yeah, okay. And for what it's worth, I can tell the audience that I too have heard it from a different source as well, within the Parliament. And we can't say it's certain because it's not certain until the fat lady sings, as they say. But it's where we can anticipate written confirmation within the next 5 to 6 weeks. And I think that's fundamentally good news. And it means that if there are any people listening who've already put in place plans for VAT registration or have put plans for German product on hold, which some people have done, now is the time maybe to start looking at that and looking at it in a much more optimistic light. I think we'll come on to future reform of this if you've got a moment at the end. I ought to mention that if anybody's got any questions, please feel free to post them in the Q&A area of Zoom, because we'd be delighted to answer any questions you've got. And I'm going to just hand over to Mario, because Mario, I know that Croatia has been, mirroring is not the right word, but very similar plans have been in place in Croatia, and I'd be grateful if you could update us on that.
Well, thank you, Tom, and a good day, everyone. I will just give a short chronology from 2021 till now. In January 2021, Croatia introduced a new provision in our VAT ordinance, which is an implementing act of the Croatian VAT law. And this amendment to the VAT regulation has prescribed that TOMS does not apply if the taxpayer's registered headquarters or permanent establishment from which the service is provided is not located in the European Union. The next year and a half was marked by uncertainty and our attempts to obtain clarification from the central office of the Croatian tax administration. And finally, in June 2022, the central office of the Croatian tax administration issued a public opinion And in that opinion, they clarified that the terms does not apply to those without headquarter or permanent establishment in the EU. Furthermore, it was established that each transaction should be considered distinct and independent. And in their conclusion was as follows: if the recipient is a domestic taxpayer or a foreign taxpayer registered for VAT purposes in Croatia, and the service provider is not registered for the VAT in Croatia, the provision on the transfer of the tax obligation based on Croatian VAT law of the VAT in that case should apply. If the recipient is a person who is not a taxpayer, for example, citizen, the service provider charges Croatian VAT in one of the following two ways. They must register for VAT purposes in Croatia, or they could register in one of the EU member states, and then they should apply one-stop shop scheme. I will speak today about I will discuss today VAT considerations for non-EU agencies when selling tourism packages in Croatia. And based on that aforementioned opinion, we conclude, we just took few conclusions. So if non-EU based tour operator sells Croatian packages, and at first we need to distinguish, does this service is sold as an individual service or as a package? If it is sold as a package, then from that aforementioned opinion, we should distinguish which is the main service that is consists of that package, and VAT rate should apply when on that main service. If they're selling individual services, of course, then we should apply VAT rate which is applicable on that individual service. For example, accommodation service, restaurant services, vehicle rental, etc. I would provide an example. If a tour operator based in the, for example, UK sells a package arrangement consisting of air transportation from London to Dubrovnik, Croatia, and 7-day accommodation in Dubrovnik and excursion to Montenegro, given that this package arrangement is sold to passengers from various countries and UK citizens, let's say that UK tour operator decides to register in Croatia. In that case, on the interpretation of the opinion of the Central Office of the Tax Administration, it's necessary to determine if the single service is shown on the invoice for that package, the tax rate prescribed for the main service applies, which is the accommodation service, for which is a reduced VAT rate of 13% in Croatia is prescribed. But in case of two elements of single, let's say, main service are equal value, for example, international flight tickets and accommodation, in that case, we should apply the tax rate which is higher. That's how they clarifies. And what happens in the case if they're selling individual services? If, of course, if they have international flight as an individual service, we have their tax exemption. So they didn't consider the obvious situation from practice. If UK tour operators procuring most of or all services through a Croatian destination management company, let's say local travel agency, in such cases, the local DMC must apply TOMS and will not charge Croatian VAT on its outgoing invoices, which UK tour operator who pass the VAT registration in Croatia could not deduct. And this reminds me on double taxation, or let's say over taxation, like Volker previously said. And we can definitely conclude that in this case, which will most often be the case, the UK tour operator compared to other tour operators from EU member states are put in commercially significantly disadvantaged position. So right now we have few clients who pass this VAT registration procedure in Croatia, and now they want to deregister actually from VAT purposes in Croatia. And aforementioned two preliminary judgments from lower fiscal courts in Germany it encourages them to proceed with this procedure. Well, from our professional standpoint, we have warned these clients that the rulings of lower local fiscal courts in Germany are not relevant to the Croatian tax administration. And these are not judgments of the European Court of Justice, whose conclusions all EU member states are obliged to implement into their legislation and are binding. Well, that was the short explanation what we have right now in Croatia and with what we are dealing with right now.
Mario, thank you so much. I think the nature of these things is it's fiendishly complicated, but I'm right in thinking that you're going to prepare a short slideshow that we can add to the recording of this webinar so people can read through that themselves. What I'm intrigued by is that there are really two questions. Firstly, this was clearly, and you can correct me if I'm wrong, but this was clearly in imitation of what was happening in Germany. But the fact is, it's not happening in Germany at the moment. But do you think they're going to be imitating imitating the Germans? Particularly, before you answer that, particularly in the light that whereas inbound tourism is important in Germany, I would never underestimate the importance of the tourism industry in Germany. But it is nothing like the overwhelming importance that it has for Croatia. And this is potentially a very damaging move if you're reliant on United States tour operators, for example, indeed ETOA members. If you're reliant on them to sell Croatia as a destination, to impose what's quite a punitive tax on them. So do you think they're actually going to go ahead with this?
Well, just to answer on your first question, yes, I believe they tried to copy everything what Berlin does, and they were in a hurry, and they implemented actually in our VAT law. Mm-hmm. Right now, we don't have any further clarification, and I believe if we will very soon have some changes on the European level. Mm-hmm. About TOMS, that probably they will change their mind and they will move that from our VAT law. Until then, I need to emphasize that it is actually prescribed in our VAT law, so it's clear and obvious that our tax authorities expect that non-EU based tour operators, if they are selling travel packages, Croatian travel packages, they expect them to register for VAT purposes in Croatia.
And this is, and just to emphasize, it's really clear. This is live. This is happening now.
Yes.
All right, fine. Goodness. David, have you got any question on this that I've missed on this, other than this reasonably startling information?
No questions. I'm aware of a number of UK tour operators who have registered in Croatia. and presumably are paying Croatian VAT on some basis. But equally, I'm aware of a lot that have not registered. I think the second group is rather larger than the first. I think it's worth making the point, and this is really just expanding on something I said in my introduction, that there is absolutely no certainty under EU law what the position should be. Croatia has gone in one direction, and as Mario was just saying, that is the effect of Croatian domestic legislation. But of course, it does need to be in accordance with the principal EU VAT directive. And there's, I think, a perfectly valid view to say that in fact it's not. Volker mentioned in passing, and Mario mentioned it as well, the Federal Fiscal Court decisions of earlier this year, which cast doubt on the plans in Germany, and Volker might expand on this, but as I understand it, said not only is VAT not payable by UK tour operators in Germany under German domestic law, but also expressed an opinion that it's not due under EU law either. So if that position is correct, then it would suggest that the Croatian position is unenforceable, but it does make a very, very difficult position because there is absolutely no certainty at an EU level, whereas there is now certainty as to the effect of Croatian law. So it would be a risky thing not to comply with the Croatian position. That's my view on it.
Goodness. There's someone about to say something. No. Volker was.
Tom, let me add the following. What we can say about what is right or wrong, what is possible on EU level, as long as we don't have a decision of the European Court of Justice, we don't know. What I have also heard, that's again rumor from Brussels, that the EU Commission itself, if Germany would go forward with its former approach of trying to tax non-EU based operators under normal VAT rules, the EU Commission would not interfere. This is what we've heard. They would simply say, okay, fine, because then it's brought up before the European Court of Justice and we see what's going on. This is hearsay also from several people who were in touch with those that have to that deal with even with the EU TOM study 2022 we're still waiting for. Yeah? So what Germany now does will bring more confusion into everything. So it is, if you see the historic developments on all this, Croatia was the first country that introduced it, non-UTOs ex-TOMs, because that is simply their law, or that is the rules and their understanding. Germany was second, without anything in the law, was simply publishing this one sentence and not being that happy if it is checked by the fiscal courts to be correct. The proceeding before the lower fiscal court of Lower Saxony, that's where it is, was a preliminary proceeding, so it's not a final court decision, it's not a decision of the of our federal fiscal court. However, this is a very good decision, and the topic is that interesting that that is now TTL supports a master thesis that's dealing exactly with this topic. And this master thesis, so the professor in Germany who is working on this is Mr. English. His name is English, not English, from the University of Münster. And he is one of the few professors who is good in VAT, who understands TOMs, and who is sitting in the VAT expert group. And he's dealing with this master thesis. I know the guy who's written it. He's already presented it at our last seminar in April in Hamburg. And he comes to the same conclusion as the fiscal court, saying, well, there is no reason to exclude non-EU based operators according to the wording of the German VAT code. So what will happen when Germany is going to postpone again for the next 3 years? This fiscal court case will stop simply because the tax administration, when they read the new letter, they will say, okay, dear tour operators from UK, you do not have to pay any VAT. You do not be registered, we deregister you for the next 3 years, and then we'll see what's going on. And that's what's happening. So there is no chance of getting an ECJ decision from anything what came up here in Germany. This is what I call confusion. However, that's what it is. And if you see other EU member states where their understanding also is that TOMs should only be applied by EU-based operators, for instance, Portugal, Sweden, Cyprus, and also Greece. There are some others that have the same opinion. The majority of member states does not deal with it or has no idea on it. And all what we have found out within TTLnet is this is a general understanding of the rules. Yeah, so nobody has anything in its law in these set countries, or it says TOMS only applies to EU-based tour operators. This is the fact. And within all this, well, we're trying to bring things forward within the UTOM study.
Well, I think as Volker's alluded to, there is an EU TOM study. I think it might be worth just stressing when we say that people are included in TOMs or not included in TOMs, it's probably worthwhile clarifying that TOMs is a simplification of normal VAT rules. Mm-hmm. And in conventional terms, anybody selling a product which is enjoyed in Europe or enjoyed in any European destination is expected to register with the place where that product is taking place, and charge VAT as a normal business would. Under TOMs, you're allowed not to go through that process and only charge VAT on your margin and refund that, well, not refund, but send that VAT to the country in which you're based. Yeah. Now, you can't send that VAT to the country in which you're based if you're not based in the EU, because there's no mechanism for doing so, really. And so whether or not the company is inside or outside TOMs implies that if TOMs is applicable and you're based outside the EU, you effectively have no margin liability on your margin. Yeah. That's what the allusion is to. Now, David, we know that there is a reform proposal going through the European Commission Taxation Unit. We've been watching it. I'd be quite interested to hear an update on that.
Okay, thanks again, Tom. Yes, so we've talked about this on previous ETOA webinars, but I will give a recap of the latest situation. By way of introduction, I think it's important to make the point that the Commission has a number of objectives here. They want to update the existing rules. They're best part of 50 years old now. The current scheme, it needs to be updated. It needs to reflect the way business is now done. The Commission also wants to clarify certain concepts within the scheme to try and reduce, at least, if not remove entirely, the number of different approaches by member states. And thirdly, important really in the context of what we've just been talking about, the Commission wants to ensure that the obligations of tour operators, no matter where they are in the world, are clear. So there should, if the Commission gets its way, really be no room for individual member states to do their own thing. So for UK and Swiss and US tour operators, anybody trading outside of the EU, whatever obligations they may have would be uniform throughout the 27 member states. The first point to make is that there is no formal proposal on this yet. I'll say a few words a bit later on as to when we might expect such a proposal, but there is absolutely nothing at the moment. What has happened is that the Commission over a number of years now has been consulting with business and other interested parties, and during the course of last year had a firm of economic consultants to undertake a study on the economic effects of certain possibilities. That study was completed around about last Christmas, and really nothing has been published since then. The study itself hasn't been published, but there have been discussions with the Commission, and the Commission has put various ideas out there and asked for feedback. So what I will do is just summarize what I think are the key areas that the Commission is looking at. Volker talked about the double EU approach. I'll say a few words on that because that's a key aspect of this. One of the most important aspects of the reform, and the most important in terms of identifying the responsibilities of non-EU tour operators, is what we call the place of supply. So this is the term given to identifying the place in which the service provided is subject to VAT. As far as TOMS is concerned, we're really talking about the place of supply, i.e. where VAT is payable, not on the full value of the holiday or other package, but on the margin. And there are a number of competing ideas. One approach, which we believe the Commission at least likes, is to tax the margin by reference to the place of residence of the customer. So immediately, the margin would be free of EU VAT whenever the customer is resident outside of the EU. So a UK tour operator selling a holiday to a UK consumer would automatically have no EU VAT responsibilities, regardless of anything else. The residence of the customer would remove any obligation whatsoever to account for EU VAT. The second test is that the margin would only be subject to VAT when the travel is within the EU. That's the double EU approach. And one idea is that it would apply to everybody. So whether you're an EU or a non-EU tour operator, you would have to satisfy the double EU approach before any VAT is payable, i.e. it would have to be an EU resident customer and the travel would have to be enjoyed within the EU. Both of those conditions satisfied, it makes absolutely no difference whether the tour operator is in the EU or not. VAT is payable in the member state in which the customer is resident. That's one of the ideas. From comments that the Commission has made, we believe that that is, for them, from a technical perspective, a popular solution. The main alternative is to tax the margin in the member state of destination. So the place of establishment of the tour operator wouldn't matter. The place of establishment or residence of the customer also wouldn't matter. All that would determine taxation would be whether the holiday itself takes place within a member state. If it does, regardless of the other circumstances, VAT is payable on the margin made on that holiday, payable in the member state of destination. So a holiday in Italy would be subject to margin VAT in Italy, regardless of everything else. So under that model, a tour operator in the UK, Switzerland, US, Australia would pay Italian VAT, would have to be registered in Italy, and would have exactly the same obligations for holidays in Croatia, holidays in Austria, Sweden, etc. Clearly a hugely more complicated exercise than the first option, determining the whole thing essentially by reference to the place of residence of the customer. I said before that we believe that the European Commission itself prefers the residence of the customer approach. Certain documents published 6 months or so ago would suggest that some, at least, member states prefer the member state of destination approach, no doubt simply because there's more revenue in it for them. And it's also perhaps an easier approach to justify within normal VAT principles, but it would introduce a hugely unwieldy and difficult accounting regime for tour operators. We also have the possibility of a hybrid approach. So one set of rules would be established for EU tour operators, but a different set of rules for non-EU. So one possibility is that EU tour operators would be unaffected by all of this. They would continue with the current rule, payment of VAT in the member state of establishment. But non-EU tour operators would move on to a new basis, perhaps payment of VAT in the member state of destination, i.e. the second of the options I just described, which would place non-EU operators in a very much more complex accounting position, not necessarily a higher VAT cost, but certainly a very much more complex system than those enjoyed by tour operators within the EU. So there's a lot of uncertainty, but there's a very clear determination here on the part of the Commission, I think it's fair to say, to find something that works and achieves something close to equality of treatment between EU and non-EU. I'll move on to the treatment of B2B supplies. This has been a big area of difficulty. The loss of input tax on business travel when the purchase is transacted by a TMC, for example, or any other travel business accounting under TOMS. There's a very real opportunity this time around, I think, that a B2B opt-out will be agreed. Again, I think the Commission finally sees the merits in doing this. I think there is a good chance that will be accepted. Specifically on B2B wholesale supplies, in addition to the possibility of an optional B2B, well, a voluntary opt-out, the papers I've seen raise the possibility of the compulsory exclusion of wholesale supplies from TOMS and the application as a result of normal VAT. So the sort of VAT approach that we've just been discussing for Germany and Croatia. There's an acceptance, I think, within the Commission papers that to the extent that the law requires or permits B2B supplies to be excluded from TOMS, there must be uniformity on the approach to take in applying normal VAT principles to those B2B supplies excluded from TOMS. So, for example, what sort of VAT position would exist when selling a package on a wholesale basis? If it's not in TOMS, how do you apply VAT? Would you, and Mario talked about the Croatian approach on this, what it essentially boils down to is whether the package is considered to be one thing, if you like, from a VAT perspective, so that the single VAT treatment is applied to the full value, or does a package of, should we say, a flight, accommodation and car hire consist of three different things for VAT, with each of those three components given a different VAT treatment, different VAT rate, determined, of course, by the normal VAT rate applied for the service in question in the member state in which the service takes place. So a lot of difficult questions to be considered. Before I say a few words on where I think we are with all of this now, the Commission's papers also raise the prospect of a compulsory exclusion of accommodation only supplies from TOMS. So this would apply, as I read it, regardless of whether the accommodation is supplied on a B2C or a B2B basis. So it wouldn't apply to accommodation included within a package, but where accommodation is sold on its own There has been a suggestion, I don't really understand why, but has been a suggestion that the transaction might be excluded compulsorily from TOMS, thereby requiring the provider of that accommodation only, regardless of where they might be in the world and regardless of what else is decided on TOMS, to register for VAT in the member state in which the accommodation is located. To my mind, that just seems an unwarranted complication. In terms of timing, as I said just now, the study was presented to the Commission around about Christmas last year. And at the time, the Commission, I think, was fairly confident that they would have completed a proposal and an impact assessment by the middle of this summer, and that the impact assessment study and the legislative proposal on this would be published, well, let's say by July. It now seems very unlikely, this is the information I have, it seems very unlikely that that will happen. Things don't seem to have moved as quickly as perhaps was first indicated. I know the Commission has, how can I put this, resisted, I suppose, various requests for a meeting from third parties on the ideas. So it does seem very likely that the timescales have slipped on this. I heard a while ago that instead of it being published perhaps in the autumn of this year or possibly even earlier, it's now unlikely to be any sooner than the first quarter of 2024. And I guess it might even be later than that. Whether, this is a question for Volker really, whether the German anticipated delay of 3 years in any ways tied into the likely timescales on TOMS reform. Don't know, an interesting point. It was thought that Germany, perhaps, this is going back 6 months or so, when Germany announced its delay at the end of last year, that possibly a reason, at least for the delay, was the fact that the Commission was moving forward with their reform process. The fact that perhaps it's taken a little bit longer might, on the one hand, have encouraged Germany to go ahead with their proposal, but they appear to be delaying it for 3 years. I don't know whether we can read anything into that at all, really. But that is the position on TOMS reform generally, as I see it. Very happy, of course, to take any questions on any of those points.
Thank you, David. We actually have some questions, and I'll ping them, actually, if I may. First of all, it's one to Mario, if we can go back slightly, saying that for non-EU entities operating in Croatia, given we register for VAT, and assuming the vehicle, do we assume that the vehicle for remitting VAT would be facilitated through the Croatian government? Presumably you remit the VAT through the body that you registered with, but we better just check with Mario if that's correct.
Well, that's correct, of course. If you registered, then it will be straightforward. I mean, if you need to pay your obligation, but there is also one very important thing for those from UK. They don't have to appoint a fiscal representative, but for all others that coming from other non-EU states, they have to appoint a fiscal representative in Croatia if they want to proceed with this VAT registration process.
Okay, thank you. Another question, and this is a familiar one for those of us who've been tackling it for the length of time that we've been tackling it. David, what about packages enjoyed both inside and outside the EU?
I think if we're talking about within a future TOMS, I think it's extremely likely that the position would be partial taxation. So if we were, for example, operating with a place of supply based on the place of residence of the customer, of course, if it's a non-EU customer, the whole thing would be not subject to VAT anyway. If it's an EU customer, The double EU requirement would mean that a part of the package is subject to VAT, and a part would not be, based perhaps on the number of days spent in the EU and the number of days spent outside of the EU, or maybe a cost apportionment to identify how much of the margin should be attributed to the EU time. That sort of level of detail, obviously, it's not something that I don't think anybody in particular has considered so far, but would need to, certainly. If we were talking about services outside of TOMS, I think the same would apply. So if we were looking at what we understood to be the German intention, or indeed currently the Croatian position, if a holiday was partly within Croatia, and Mario, of course, jump in here if I'm misrepresenting the position, but I think a package holiday sold at the moment, which was enjoyed partly in Croatia and partly somewhere else, EU or non-EU, would be partly subject to Croatian VAT and partly free of Croatian VAT.
Well, unfortunately, we don't have clarification from Central Tax Administration, but in my opinion, is that it can be excluded from the tax base if that part of the fee is shown as a part that is not subject to taxation. So I believe it should be excluded.
And the famous conundrum, which David has touched on, is that you would have to apportion it, but do you apportion it by the length of time people are spending there, or do you apportion it according to the cost? And this is always an interesting thing to discuss with your VAT inspector. I think would be the right way of phrasing it. David, another question here, which is, in case of compulsory B2B exclusion from TOMS, will there be a one-stop shop to claim input VAT from different countries?
There would certainly be a mechanism by which the input VAT could be recovered. That would be part and parcel of such a system. Whether it would be via the one-stop shop or not, we don't know. At the moment, well, let me just say that the one-stop shop is a mechanism which already exists. It's not really available within the travel sector, but it is a recognised mechanism by which VAT due on certain types of supply can be paid through a one-stop shop, not via a traditional VAT registration. So an EU business, for example, might have a single OSS registration in its member state of establishment, and via that system it would declare its output VAT due to all member states through a single declaration made to a portal in its home country. But the crucial point here is that it is only for the declaration of the sales, the output VAT. There's currently no mechanism for the recovery of input VAT. That has to be done separately, which makes for an unwieldy, difficult process and often a requirement to pay the output VAT considerably before you're allowed a recovery of the input VAT. We've been making the point now to the Commission for quite a few years that whilst that might work for certain types of service, it wouldn't work for travel, where recoverable input VAT is often nearly as much as the output VAT payable. And in recent papers, there were some indications that the Commission is perhaps prepared to accept that. Various comments alluded to a possible system where the OSS would be amended so that both the output VAT and the associated input VAT could be declared through the one OSS return. But I'm afraid that's a point that will undoubtedly need to be debated and agreed, but there is no clear position on it at this stage.
Thank you. Thank you very much for that, David. I think the situation is ever complicated. It's normal for me to say at this stage of the webinar that if you've been following us and it all makes perfect sense, you clearly haven't been paying attention. It's inherently something that scrambles the brain. But I would just really stress, I think, I don't know if any, Volker, you want to say anything or add anything? No, fine. Mario? Well, look, I just to wrap up, I think that there are numerous things that should be thrown up by this. I think the current situation in Croatia is far more critical than I had imagined. And I think we may need to revisit this on a special thing, because those people trading in Croatia, a lot of tour operators will be unaware of their obligations in this area. So I think we need to spell this out very clearly in the future, if indeed they are going to be proceeding with this, given the decision of the German authorities, or what appears to be the decision of the German authorities. I think also I will mention in passing, and we will have another webinar on this surely, that there are separate plans on the taxation of platforms. This is principally to clear up what they perceive as a non-level playing field, where products such as agritourism, for example, or individual flats or small businesses having their products distributed online without any VAT being charged, alongside other products which do have VAT charged for very similar services. And the Commission is keen to iron out that kink, and we're looking at all sorts of proposals due to be coming in reasonably shortly, and I think we need to outline those for people. Allied to that, though not a direct byproduct of that, I'm hearing stories that the Italian tax authorities are proposing to remove individual supplies, particularly individual supplies of hotels on an FIT basis from TOBs. And they're expecting those people who are selling individual hotels to register and apply normal VAT rules on these. This is a very significant move by Italy, and I'm trying to find out more information on that. And the moment we have it, we'll have another webinar, undoubtedly. But it really just leads me to say thank you to everybody here. Thank you, Mario. Thank you, Vodka. Thank you, David, as ever. This is a fiendish problem, but the good news is it looks like the German authorities are about to announce a 3-year delay. And up until now, they have waited until December for doing so, thus giving people no time at all to make proper plans. And tour operators, intermediaries, they add value by making plans. If you can't make plans, it's very difficult to be in business. So this is basically, if it's happening, this is very good news. It's good news for the tour operators. It's very good news for Germany. And I think we need to congratulate, in particular, the domestic German associations, who I know have been lobbying very hard on this in the background. All right, ladies and gentlemen, thank you so much for paying attention. I hope we've answered your questions. And I'm going to leave you in peace. The recording of this will be on our website fairly shortly. But thank you, panelists. Thank you, audience. Goodbye.
Goodbye.
Thank you. Bye.
Bye-bye.